Good day, mate. I hope you're all well. We're back, and it's Tuesday, the 22nd of February. And I thought I'd come in with an update and update you all with the good news I have received. The Funded Engineer is back. They are back, and they're using Blueberry Markets as their provider. Their MetaQuotes provider, MT4 and MT5, is back on the Funded Engineer, and they are providing us that through Blueberry Markets. So that is wonderful news. I'm extremely happy and grateful that it's back. There was did have a slight bit of doubt that it might ever come back, but yes, we are up and running. We have got an account back. We're on phase 2. The road to 1 million this year in prop firm funding is well underway. I am in phase 2 of the £100,000 challenge. So hopefully I'll be able to continue the way I left the phase 1 and share that with yourselves using TradeZella. Obviously learning along the way and failing forward, as you know. Today we have the mic set up, which is a bonus. The other day I forgot to put the mic on and it was very quiet. So again, that's 1% better than yesterday. I'm failing forward. I'm learning. We're going with the flow. So, however, I wanted to update you whilst I'm here. Obviously, it's good news with the Funded Engineer, and I wanted to update you on so far this week's trades. It's only Tuesday morning, the end of London, and I took a trade yesterday afternoon in the US session and one this morning. I don't really trade the London session on the Monday morning. It's what we call false move week beginning. So normally price does exactly what it's done here, is induces traders long and reverses out for the rest of the week, or maybe up until Wednesday, Thursday you could see midweek reversal. But yeah, typical London trade, false move week beginning, price induced higher. It gave something what I call a London pattern in the US session. It was absolutely beautiful on the 15-minute. TDI matched up, gave confluence. You have one leg out the band, one leg in the band. You have this as a whole one leg. As this didn't close below the 13, it's classed as, this is all classed as the first leg. The first close below, that's locked that first leg off. Then we have the inducement long. Price couldn't break above the previous high, which is indicating that there's some severely trapped volume there, that price doesn't want to come and free up, stops, etc. Price shifted back below, and then it gave this typical level 3 type price action, chipping and chopping over the 13 EMA, inducing traders long and short, gathering contracts, basically screwing around. And as it got later in the day, when price gave the shift below and then couldn't get the momentum to continue any lower, and it closed back above, I exited the trade. This was a 0.5% risk trade. I think it was 0.3 or thereabouts loss on this trade. Then this morning I was again looking for shorts, especially as had I have held this over the evening, which I don't do. I don't hold trades through the night. It's not something that sits with my personality very well. I've tried it many a times. Even though people say you haven't accepted the risk, I have accepted the risk. It's 0.5. It's not going to break any records whether it goes against me, and it's only going to be 1% if it hits the 200 EMA, which would have been my target. So yeah, it's not like the amount prevents me from sleeping. It just doesn't suit my personality, allowing trades to run through the evening, and looking at my phone before bed doesn't benefit me in any way. So I close it down. I'm happy to come back the next day and look for the setup, which I did do. And this is a beautiful signature intraday 50 bounce. Some people call it a water bounce. It's called other things with other groups, and I'm sure everyone has different names for it. But for me, this is a beautiful trade. Price moves out in the Asian session, rolls over, trickles down, gives us a pullback, bounces cleanly off the 50 EMA and also the 50% of the Asian range, which is an Asian range trade also. So it is called, there's different nuances and variances for each single trade. My entry was just below the shift candle when it closed below the 13, and price then rolled over and met my profit at target at 2 to 1. This was a 0.4% risk for 0.8% gain. So happy with that this morning. I'm up for 0.4% for the week. It doesn't seem a lot, but on my actual accounts I don't risk any more than 0.3 to 0.5. Obviously with my challenge account that's going to be with the funded engineer, I may risk more. I may risk up to 0.8 to 1%, which obviously would have given me around 1.5% to 2% return had I took this trade this morning. However, I hadn't got the information, the details, so I've missed out on the winner on the funded engineer, which is a shame because that would have given me a nice little buffer for the rest of the week. But yeah, this if you look here, this dotted grey line is the weekly open. So price opened here on the Sunday evening, obviously creating this weekly open line. This is the day open price from the solid line is the day open price from the Asian range on the Monday. And obviously this price trickled around. It didn't break through with any velocity. The hour candle closed here, so I was cautious and I brought my stop loss into break even. However, price then pushed down in the next half an hour, took my TP, which was risk off the table. I was happy. I sort of had a feeling that price would, this dashed line here is a 0-0 figure. It is the 190,500. I sort of thought price may give a little bit of a reversal, maybe even pull back to the EMAs before rolling over, which it has done. Didn't quite reach the EMAs, but I'm happy with the profit made today. So I'm not too bothered about looking at this trade again. So I was talking earlier about the Monday London Open. Yesterday I started gathering some data on Euro Japanese yen, and I only just started gathering it from in the beginning of London yesterday, and I finished it off yesterday evening. It was literally from trades from the 15th of January that have played out between the 15th of January and yesterday. There was 15 trades, 12 winners, which is pretty good odds. They were all 2-to-1 winners as well, at least. So this is also played out this morning. This is a trade for me. It wasn't as clean as GJ because it has created a bearish crab, which is a Gartley, a harmonic, 4-hour harmonic. So I'll be looking for an hour entry normally when that fires. As price rolled over, it didn't really give a clear close below and back above and roll over again. It was in the Asian session as well, so I'd be asleep here. I'd be more looking outside the Asian range. As price didn't break and just continued to roll over, there was no real clear indication of sell signal on the TDI. I'd like the second leg to close below clearly, back above and back below inside the band. Then potentially I would be more interested in taking that trade. However, this on the 15-minute is more of a beautiful trade. It's called an ID safety trade. The only difference is, the only thing I didn't like about it is the one leg out the band and one leg in the band is the wrong way round. But that is one first leg. That is your first leg locked. Back above, close below, entry would be there. Stop loss would be 12, 13 pips, 26 pips would be the target, which you would have easily got your 2-to-1. So yeah, I'm going back through the data of EJ because I take, it's not about the pairs with the way I trade, it's more the setup that I trade. But over the years I've added setups along the way, and my intentions this year are to reduce the setups, especially with trading the funded account for the road to 1 million, is to reduce the setups, take the setups that play out the most. So gathering data on EJ is crucial for me to find out. It's one of the pairs I like to trade. You're more likely to get a 2-to-1 with EJ, maybe even a 3-to-1 than you are with the EU and AU. They're less volume, less movement. GJ can be quite volatile. I do like GJ. These are the pairs that I'm going to be watching more of. Maybe add the pound Aussie dollar, which I do like, but at the minute it's not played out for a while for me, so it's not something that I'm too interested in. However, yeah, I'm just going to continue gathering data for the rest of this year. This month, for the rest of this month for 2023, I would like to have the data fully for EJ and then maybe move on to another pair. Yeah, so I'll be keeping an eye on EU and GU. GJ has returned to all-time highs, or for a long time. I think we're thinking 2015 was the last time it was at this previous height. Yeah, 1st of the 8th 2015, so August 2015. This is the first time price has recovered against the Japanese yen, and got to these highs. So I'll be looking for some more short potential trades as the 13 crosses the 50. That will be locking it in a level 1 for me. I think today is the day that will drag down. I'd expect the EMAs to fan back out, price to move back up and give me some sort of bounce entry. That is the plan. So yeah, I'm excited to get back underway with the Funded Engineer. I'm gutted I missed the opportunity this morning, but that is the way it is. Life goes on. So yeah, any questions, please ask away. I'm just getting used to doing this now. I'm gonna increase the amount of content, try and bring more value as I can, explain the way I'm trading, and give you all the insight into me passing these funding challenges. But yeah, I hope you all have a safe week trading. Check out the news. It's a marathon, not a sprint. So keep on keeping on. Speak soon.